Who's got it worse, taxes in the US versus Europe? Have you ever thought about whether Americans or Europeans pay more in taxes? Join us as we reveal the shocking truth about taxes in the UK and the US. Which method is better for taxpayers when it comes to things like income levels and social benefits? Get ready to find out whose wallet gets hit the hardest. Are you ready to change what you think you know about taxes? Because of the fact that tax rates are typically varied from one nation to the next, the fiscal regimes that are applicable to Europeans and Americans are highly distinct from one another. Regarding the establishment of your own company and the hiring of staff members, the question that has to be answered is which of these two options is more economic. When it comes to the tax rate in Europe against the tax rate in the United States, the countries in Europe often have lesser costs when compared to the United States. When evaluating your financial benefits, however, it is important to take into account a number of factors, including the amount of income, the location, as well as the economic and monetary conditions. You can always get in touch with a company that is familiar with the intricacies of tax systems, which is the good news because it eliminates the need for you to conduct research and make comparisons between the taxes in Europe and the United States. IT outstaffing in European countries for enterprises that manufacture technology products is the primary area of expertise of our organization. Among these are the utilization of the most effective methods for recruiting skilled offshore developers, the management of accounting and payroll tasks, and the verification that everything is in compliance with the law. In this article, you will find all of the necessary information on the tax rate in Europe compared to the tax rate in the United States. If you are interested in understanding how it operates, you should find this article to be helpful. Let's find out what the tax rates are. When comparing taxes in the United States to those in Europe, the first thing that one ought to be aware of is that the United States has a more complicated system of taxation rules, which implies that individuals and businesses are required to pay a variety of taxes at both the state and federal levels. Consequently, the location of your remote worker has an effect on the amount of tax liabilities you are responsible for paying, as the tax laws in each state are distinct from one another. An employee is required to file a personal income tax return in 43 out of the 50 states, for example, if they conduct their work within the borders of the state for more than a certain number of days, which can vary from state to state. What you should know about taxes in Europe compared to those in the United States is that in the United States, any corporation is required to pay 21% of the federal corporate tax in addition to state income tax, which can range anywhere from 1 to 12%. On the other hand, some states mandate that there be no taxes imposed on income that falls below a certain threshold, while others may impose their own taxes. The revenue of firms that satisfy specific conditions may also be subject to a minimum tax rate of 15% beginning in 2023. This tax rate will be determined by the revenue that is reported in the business's financial statement. The average total tax rate in the United States is 15.3%, which is not excessively high in comparison to the rates in certain other nations such as the United Kingdom. To add insult to injury, when you compare the tax rates in Europe and the United States, you will notice that there is a tax that is comparable to the personal income tax, which is typically imposed on the state, federal, and local levels. The federal tax is often deducted from the pay of an employee, and the amount of tax that is deducted might range anywhere from 10 to 37%. The state tax might range anywhere from 0.25% to 13.3%, depending on the state and the tax band that is being applied. In addition, the majority of companies are obligated to pay the federal unemployment tax, often known as FUTA. This tax is equivalent to 6% of the first $7,000 that an employee receives as income during the course of the year. In addition to that, the regulations might mandate that they pay SUTA, which stands for state unemployment taxes, as well as local taxes if they are appropriate. Whenever you are comparing taxes in the United States to those in Europe, it is essential to keep in mind that employers are required to pay FICA taxes, which are taxes imposed by the Federal Insurance Contributions Act and include taxes on Medicare and Social Security. In comparison, the Medicare tax is 2.9% plus 0.9%, while the FICA tax accounts for 12.4% of the total. Let's compare the tax rates in the United States and Europe. Regrettably, there are no countries that do not impose taxes. As an illustration, Monaco benefits from a personal income tax rate of 0%, while the corporate tax accounts for 25% of the total. During this same time period, the Tax Foundation has reported that the average rate of taxation on corporations in nations that are members of the OECD is 2.5%. In spite of the fact that personal income tax rates vary from country to country, they can also change depending on the tax bands to which they are assigned. When compared to the United States, taxes in Europe are often greater. When comparing the taxes of Denmark to those of the United States, the income tax might range anywhere from 8 to 56.5%. In the case of German tax rates compared to those in the United States, It can range anywhere from 9 to 45%, in addition to a solidarity surcharge of 5.5% if it is appropriate. In the United Kingdom, the personal income tax rate ranges from 20 to 45%, whereas in Sweden, the tax rate can range anywhere from 30 to 57%. This is something that can be seen when comparing taxes in the United States and the United Kingdom. At the same time, when you begin to compare the tax rates of the United States to those of other countries, particularly the income tax rates of Eastern European countries, you will notice that the United States has greater statistics. As an illustration, the personal income tax rate in the Czech Republic is 23%. In addition, the nation is not at the top of the list because there are other countries that have income taxes that are even lower than this one. When compared to the tax rate in the United States, the tax rate in Europe may appear to be unfair when it comes to Social Security taxes. Comparatively, the combined rate in the United States is 15.3%, whilst the rates in Europe can range anywhere from 13.97% in Switzerland to a staggering 65 to 68% in France. Differences in taxes between the United States and Europe. Where are the taxes lower, and where is the best place to employ a remote team? It is possible that you may find the information to be overwhelming when comparing the tax rate in Europe to the one in the United States. This is due to the fact that there are a lot of factors to take into consideration other from the numbers. At the same time, if you are willing to recruit an offshore team of professionals from a foreign country, the income tax rates in Eastern Europe are the best rates available. The following table provides a comparison of the tax rates in Europe and the United States, which will assist you in comprehending and gaining a clear understanding of the amount that you will be required to pay. The United States of America and certain Western European countries, such as Germany and the United Kingdom, have tax rates that are comparable to one another. This is the case when comparing the tax rates in Europe and the United States. On the other hand, the corporation and individual income tax rates in the United States are significantly greater than those in nations with low income tax rates such as Romania and Hungary. In terms of the Social Security tax rate in Europe compared to the United States, the amount is lower in Denmark, for instance, than it is in the United States, but the statistics for all other countries are greater. The tax rates in Eastern European countries are generally lower than those in other countries, but you should keep in mind that the final difference is determined by the taxes levied by each state. The United States of America has a tax filing system that is highly cumbersome, which is another significant component of the tax rate in Europe in comparison to the United States. This indicates that companies must not fail to take into account the additional costs of preparation in addition to the tax rates. If you take a closer look at all of the differences in tax rates between Europe and the United States, you will notice that Eastern European countries provide more favorable tax rates for personal income, whereas the United States has quite fair tax rates for both corporate income and Social Security. Eastern European countries are superior when it comes to remote recruitment, outstaffing, or offshore software development. To summarize, it may appear that it is possible to start a firm in Western Europe or the United States. However, Eastern European countries are far more advantageous. Take into consideration the fact that there are more than 1 million people in the pool of talent for information technology, and this approach becomes even more appealing. Don't miss out on more insights into global tax systems and their impact on your wallet. Subscribe now to stay informed and join the conversation on taxes in the US versus Europe.